You've seen the headlines scrolling across your screen this morning. It's 2026, and the boy wonder archetype is still the most dangerous currency in the world. You see them in sleek hoodies, promising to disrupt industries you didn't know were broken. They are backed by a culture of venture capital myopia that treats billion-dollar valuations like monopoly money. You feel that familiar itch, that sinking sense that you're missing out on the next big thing, that the system is a closed loop, and the only way in is to follow a visionary who sees a future you simply cannot. But here is the cold, clinical truth. The visionary is often just a high-functioning predator with a better publicist. The blueprint for the modern rug pull wasn't written in a Silicon Valley incubator. It was forged in a Reseda garage in 1982 by a 16-year-old with a vacuum cleaner and a sociopathic grasp of human desire. You think you're too smart to be conned. That's exactly what the institutional investors thought. That's what the Wall Street banks thought. That's what the elite auditors at Ernst & Winnie thought when they signed off on a ledger that was more fiction than a pulp detective novel. You are the victim of a culture that values the hustle over the haul. To understand how your own pockets are being picked today, you have to look at the boy who turned a bucket of soapy water into a $280 million empire of smoke. In the early 1980s, the San Fernando Valley was a sprawl of sun-bleached strip malls and desperate ambition. Barry Minkow was a teenager who didn't want a paper route. He wanted the keys to the city. He started ZZZZ Best Carpet Cleaning with a few machines and a hunger that should have been a red flag. To you, carpet cleaning is a chore. To Minkow, it was a stage. He didn't just want to clean your rugs. He wanted to clean out your bank account. Minkow realized early on that he wasn't in the cleaning business. He was in the illusion business. He understood that in America, if you look like success, the world will treat you like a king before you've earned a single dime. He took the boring, dirty grind of industrial cleaning and dressed it up in the lucrative jargon of insurance restoration. By 1986, ZZZZ Best was the talk of Wall Street. Minkow was the youngest CEO to ever take a company public. He was on Oprah. He was the poster child for the American dream. But if you had walked into that Reseda garage and looked past the charismatic smile, you would have seen the heavy, physical reality of the lie. The ledgers weren't filled with names of satisfied homeowners. They were filled with the ghosts of contracts that never existed. He owed money to people who didn't take an IOU for an answer. By the age of 18, he was already deep in the pockets of organized crime, borrowing $15,000 from a local racketeer just to keep the lights on. That $15,000 was a drop of blood in a pool of sharks. Why did the scam escalate so violently? Because loan sharks break legs. To pay back the mob, he needed more than just dirty carpets. He needed a scam so massive, it would create its own gravity. He didn't just cook the books. He orchestrated a symphonic Ponzi scheme. He created the Insurance Restoration Department. It sounded professional. It sounded like guaranteed cash flow. In reality, it was a black hole. He told investors that ZZZZ Best was winning massive contracts to repair buildings damaged by fire and flood. He wasn't just a cleaner anymore. He was a savior of commercial property. But there were no fires. There were no floods. There were only paper trails leading back to a teenager who realized that most people are too lazy to check the math if the story is good enough. You are paying for that same laziness today in every inflated tech stock and every pump and promise model that hits the market. Now, let us open the case file on ZZZZ Best and reveal the shadow behind the success. To understand how a 19-year-old boy looked the titans of Wall Street in the eye and lied without blinking, you have to understand the anatomy of a paper ghost. In the world of high finance, a contract isn't just a piece of paper. It's a promise of future gold. And Barry Minkow realized that most people are so dazzled by the gold that they never bother to touch the paper. First, Minkow needed a phantom client. He found his accomplice in Tom Paget, an insurance claims adjuster who was happy to play the role of a corporate executive for a cut of the action. Together, they birthed Interstate Services Incorporated. On a ledger, Interstate looked like a powerhouse. In reality, it was a desk, a telephone, and a stack of forged letterheads in a back office. Minkow would generate a fake contract for a massive insurance restoration job. He would draw up a multi-million-dollar cleanup of a flooded office building that never actually flooded. When banks or auditors called to confirm the job, Paget would answer the phone at Interstate Services, confirming that ZZZZ Best was the only firm they trusted with a project of this scale. With a verified multi-million-dollar contract in hand, Minkow would go to a bank or an investor and use that phantom revenue as collateral to borrow hard, cold cash today. It was a recursive loop of fiction. He was using fake money to borrow real money, to pay back the old money he'd borrowed from the mob. But as the debt grew, the lies had to get taller. By 1986, when ZZZZ Best was preparing for its initial public offering, the company claimed that 86% of its revenue came from these restoration contracts. Think about that. Nearly 9 out of every $10 claimed by the company were a complete fugazi. Minkow wasn't building a company. He was building a cinematic set. He was a director, and the auditors were his audience. To you, an audit sounds like a forensic autopsy. To Minkow, it was an opening night performance. On the day of the IPO, ZZZZ Best priced its shares at $8. Within weeks, they traded north of $18. That implied a price-to-earnings ratio based on earnings that simply did not exist. Underwriters marketed the restoration backlog as guaranteed future revenue. Analysts projected forward cash flow based on contracts that were nothing more than photocopies in a filing cabinet. The street wasn't valuing carpet cleaning. It was valuing a spreadsheet. It was the purest form of mark-to-myth accounting. The haunting reality of this due diligence illusion crystallized during the Sacramento site visit of 1986. The auditors at Ernst & Winnie one of the big 8 accounting firms at the time, demanded to see a job site.
Stand accused.
They wanted proof that a $7 million restoration project actually existed. Most fraudsters would have folded. Minkow doubled down. He found a building in Sacramento that was still under construction. He bribed the security guards. He spent thousands of dollars to have ZZZZ best signs professionally printed and hung on the walls overnight. Picture the auditor walking onto that site. He smells fresh paint. He sees dozens of workers in crisp ZZZZ best uniforms hauling drywall. It looks like a massive operation. The auditors stayed for 2 hours. They took notes. They looked at the signs. But they didn't do the one thing a forensic investigator must do. They didn't check the property records. They didn't ask the owner of the building who was actually doing the work. They were so impressed by the boy wonder and his army of cleaners that they signed off on the audit. And here's the part that should scare you. They didn't check because they didn't want to. If the deal worked, everyone got paid their fees. If it failed, the shareholders ate the loss. That's called moral hazard. And it's still alive and well today. That signature transformed a Reseda garage operation into a public company valued at $280 million. In 1987, $280 million wasn't just a valuation. It was a mountain of wealth. It was enough money to buy 15 Boeing 747s outright. And every cent of that valuation rested on a foundation of 20,000 forged documents. Minkow was printing his own reality. He used a company called Cornwell Quality Tools as another shell to funnel money. He created a web of over 100 bank accounts, moving money between them in a frantic check-kiting spiral that would make a modern high-frequency trader dizzy. He was essentially a human algorithm, moving zeros and ones so fast that the banks couldn't see that the accounts were actually empty. But the physical world always has a way of asserting itself. While Minkow was on television talking about his hustle, his actual carpet cleaning business was losing money on every single job. The real business was a hemorrhaging wound. The fake business was the bandage. Minkow's genius was realizing that the system is built on a gentleman's agreement. The auditors assume the CEO isn't a criminal. The banks assume the auditors are thorough. And you, the investor, assume that if a boy is on the cover of a magazine, he must be a genius. The documents tell a different story. In a confidential memo dated April 1987, an internal whistleblower began to point out that the restoration checks were all being routed through a single branch in Los Angeles. The trail was getting warm. The performance was reaching its final act. The boy who had mastered the vacuum was about to discover that you can't clean up a $100 million mess with more soap. The silence following a financial crash is always louder than the roar of the boom. In July 1987, the music didn't just stop for ZZZZ Best. The entire ballroom vanished. The trigger wasn't a complex regulatory sting or a sophisticated algorithm. It was something far more pedestrian. A headline: An investigative piece in the Los Angeles Times pulled back the curtain on the boy wonder, revealing a history of petty credit card fraud and a $15,000 theft from his own grandmother. The mask didn't just slip, it shattered. Within days, the board of directors resigned, the banks froze the accounts, and Barry Minkow, the 21-year-old titan of industry, was forced to admit that his $280 million empire was a house of cards held together by dirty carpet water. When the smoke cleared from the bankruptcy filing, ZZZZ Best had less than $50,000 in actual assets. Every retail bag holder was wiped out. Shareholders had lost over $100 million in equity. Imagine the combined life savings of thousands of families being fed into a paper shredder for 5 straight years. That was the physical cost of believing in a liquidity mirage. In 1988, a federal jury convicted Minkow on 57 counts of securities fraud, money laundering, and embezzlement. He was sentenced to 25 years in prison, an ironclad debt for a life lived in the fast lane. But a predator doesn't change their nature. They only change their hunting grounds. Minkow eventually reinvented himself as a pastor and a fraud investigator, only to be caught and imprisoned again for a $3 million insider trading scheme and defrauding his own church. The ZZZZ Best scandal forced the creation of more stringent auditing standards meant to ensure that an auditor actually touches the physical reality of a business. But the system has a short memory. In 2026, the mechanism is cleaner. Instead of forged restoration contracts, it's AI-adjusted EBITDA. Instead of fake insurance claims, it's non-GAAP earnings that add back stock compensation as if dilution were a rounding error. When interest rates were near zero, the system rewarded stories. When rates rise, cash flow becomes oxygen, and fraud suffocates. We fall for it because we want to believe that the American dream has a shortcut. We want to believe that a teenager in a garage can outsmart the system, because that means we might be able to do it too. But the system isn't being outsmarted. It's being fed. It craves the boy wonder because he brings in the capital, he drives the hype, and he provides the perfect distraction, while the real players secure their exit liquidity through the back door. Here is the uncomfortable truth. Be honest. If you had been a fund manager in 1986 and you met a 20-year-old CEO growing revenue at 200% a year with signed contracts from a major insurance adjuster, would you have passed on the deal? Or would you have bought the hype and told yourself you'd get out before it collapsed? Who is the bigger criminal? The 19-year-old running the con, or the billion-dollar financial institutions that knowingly sold his lies to the American public? So, look at your portfolio. Look at the disruptors you've pinned your hopes on.
Look,
ask yourself, if you took away the charismatic CEO and the slick marketing, would there be anything left but a pile of empty contracts and a very expensive mask? Who are you trusting with your future today? And more importantly, why? Because in the ledger of history, every debt must eventually be paid. The case of ZZZZ Best remains the gold standard for how easily the experts can be blinded by the glare of a rising star. It reminds us that growth without substance isn't an investment. It's an indictment. Because in the ledger of history, every debt must eventually be paid.